Welcome back to another video. So this video is like relatively close to the last video that I gave you guys, which was on the daily candle, and the video before that was on the weekly candle. So this episode here, of course, we're going to go through some new concepts, but it's more about bringing all of the teachings together now. So this should start to make a lot of sense, right? If we rewind all the way to some of my early episodes and the intro to bias, I talk about building a narrative, building a story for price, right? And that's the first thing we want to do. All these things, the order blocks, the OTEs and whatnot, they're our execution models. That's what we use to execute. Of course, they do have other purpose as well, but on our lower time frames, we execute with them, right? So now, in this episode, I want to kind of really... this is potentially the last concept I'll be teaching you guys to help with our bias day to day. But I'm going to show you guys almost everything I use to, build my bias and understand what price is doing on a day-to-day basis. So let's get into it. So the first thing I'm going to talk about is significant levels, right? So PDH, PDO, PWH, PWO, previous monthly high and previous monthly low. You should be able to work out the rest. Previous daily high, previous daily low, previous weekly, and the last one is higher time frame arrays. So what does this mean? Around price, we have these levels, and by levels, I'm not talking retail, support and resistance, whatnot. These are significant levels in the sense that they have a relevance to price and how price may move every single day. And you guys should know this from my weekly outlooks. I'll mark out my previous daily high, previous daily low. On my weekly outlook, I will mark out my previous weekly high, previous weekly low usually. And if the month is closing and we are close to one or the other, I will mark out, my previous monthly high, previous monthly low. And in some cases, it is possible to also mark out your previous yearly low or yearly high. It's very rare, but I have seen people do it. And by high time frame arrays, what do I mean? I'm looking at, there's two things, right? Looking at the range of price that we're in, and then I'm looking at my 4 hour and higher order blocks, imbalances, all my other blocks as well. Again, I know I haven't taught you guys yet, and that is coming very soon, but there's a specific reason why I've taught you these things in this order. And of course, I'll include lessons on rejection blocks, mitigation blocks, breaker blocks, order blocks, and Morg has taught some of these things. So if you do want that little bit of a head start, you can go ahead and watch all of his videos, as I assume most of you guys already do. So let's jump on the charts, right? Okay, so we're gonna take this as an example. In my weekly outlook, let's come to my 4 hour first of all. I marked out this order block here as a target. We managed to run past this order block, and when we traded into this order block, as you guys can see around here this week, we traded in and we had a good reaction. I assumed that we had made the top of the week, or the high of the week rather. When we began to trade back up, I said this in the group chat, you can go and find it. I said the next target is going to be the previous weekly high. The previous weekly high in this scenario was a draw on liquidity. And if we go back to the weekly candle lesson, I explained to you guys, it's very, very common for price to make the high of the week on a Monday or a Tuesday. So now let's zoom in a little bit, right? Let's separate the days once again. Oh, wrong line. So of course the next day is yet to be made. It will be made here. Cool. So this is our Monday and this is our Tuesday, right? I think we have made the high of the week for the DXY here. Why? Going into this week, we had a bearish bias. We want to see a bearish week for the DXY and we want to target these lows. This is what I had marked out, right? Tuesday, you can make a note of this, has a 70% chance of making the high or the low of the week, depending on your bias, right? If we're bearish, it's going to make the high of the week. If we're bullish, it will make the low of the week. Bear in mind, it's a 70% chance. So again, as a kind of disclaimer, it will not happen every time. But now, looking at it, I'm fairly confident that we have made, the high of the week here. And the reason for this is we made a run on the previous weekly high on a Tuesday. If you come to an even lower time frame, you guys can see. Before I even say it, let's see if you can spot it. Asia ranges, London Judas, New York expansion. Now let's turn this off. Accumulation, manipulation, distribution, PO3. Does that make sense? Now, what am I telling you guys, right? This whole thing about building a narrative, making a story for price, understanding what price is doing, it's not something that comes easy. And that's why it's one of the first topics. It is something that, you get better at with time. You pick up intuition, you learn other things. If you guys can hear stuff, that's my cat in the back. But what happens is, as you stay on the charts, as you make your own predictions, you keep getting better at this stuff. One way that I really improved, before I carry on with this, and I'll recommend to everyone once you get to that level, right? Before, I used to watch my own mentor's weekly commentaries, weekly outlooks, and see what he expected for the next week. I'd jump on the charts, I'd look at the DXY chart, I'd look at the Euro USD chart, and I'd make my own predictions and, have my reasoning, note it down, whatever, and then go ahead and watch his video and see, what he's saying and why. If there's a difference, compare it. And that's something I recommend to you guys. And the good thing about this is, if you're in the wrong, I'll always give you my reasoning for why I pick certain things. But if things do not go my way, we can also find reasoning for why that happened. And it's always good to know, price done this because, price done that because. Knowing the reasoning, you'll begin to, pick up small details over time, and you'll start to build that sense of intuition of where price could go next. But yeah, that was a bit of a tangent. So back to the topic, right? We have the previous weekly high this week marked out. Now for context, it is now a Tuesday. We've had a very typical day where London gave us a Judas swing. We took out the previous weekly high and we had a market structure shift. What about this market structure shift, right, is convincing? What's that word I've taught you guys? Displacement. You see how strong this move away is? Literally just down candles. And of course, we've left behind minimal imbalance. We haven't really given price a reason to, retrace higher. There's nothing to really tap into. Price has literally pushed down so strong on a Tuesday, which has a 70% chance of making the high of the week after we've made a run on the previous weekly high. Right? When you combine all these things, that's how we build, that idea that, we can be comfortable that this is the high of the week. So let's jump back on the presentation. So now, I don't think this is a phrase that I've mentioned much at all yet, right? And it's going to have a lot of relevance down the line, but this is your kind of introduction to it. Time and price are very important. We have to consider both at the same time, right? So now, let's break down the explanation I gave you guys. Let's go back to the weekly candle lesson. I've told you Monday or Tuesday makes the high or the low of the week. It's very likely. Thursday makes the opposite end of the expansion, and then Friday typically ranges back into the week. Now, I told some of you to go ahead and do some data collection and see this for yourself. Note it down in an Excel spreadsheet, whatever, and go and see this, live and bring back percentages. And with this, right, the second point I've made here is logical predictions. Of course, logic has reasoning, but if you have data behind it, it's only right we assume certain things. So now, even if we didn't know what a PO3 is, even if we don't know what a displacement is, right, let's just take it to the two basic things I've marked. Previous weekly high. We've gone and run that previous weekly high. It's a Tuesday. And, now we can add the other confluences I've taught you guys. The London Judas, we've had a market structure shift with strong displacement. So now, is that a logical prediction? That is right. It is a logical prediction. So time and price in this situation, it's not, just what price is doing, just what the candles are doing. Oh, there's a PO3, there's accumulation manipulated. When is it happening? We're making the high of the day in London as we did, at the same time that we're making the high of the week, right? It just makes a lot of sense for that to happen. So cool. Now, the next topic, right? This, honestly, some of you may not truly understand this at the moment, but the reason I gave you the breaker structure and market structure shift lesson first, one of the first lessons I made, and I told you guys it is so pivotal in your trading, because that is what you're looking for. That is your trade, on a regular basis, every single day. I don't trade unless there's a market structure shift, present. Very rarely will I scalp and take those moves. I used to, but I've kind of moved away from that. I want my market structure shift every day. I'm looking for one move, and if that move doesn't come, then I sit on my hands and I wait for the next day or the next day. So when I say real market structure shift, this isn't a thing, right? There's not a real or a fake market structure shift. This is just something I've kind of made for you guys to understand. What is a market structure shift? Just break down the phrase. Structure shift. There's a change in structure. There's a reversal in trend. There's a change in trend, right? For a real, in apostrophes, market structure shift, we need to trade into these areas that I've mentioned. We need to, trade to our draws of liquidity, previous weekly high, weekly low, daily high, daily low, and that's when we hunt for a reversal. So today, we can go back to the charts and we see a live example now. So today, as some of you will know, I was on the charts, during the day, and I was kind of walking through the fact that I wanted a reversal for the DXY. So usually I sit, on my 5 minute, and I could just very clearly see DXY, creating this curve upwards, and we're making a move. I had my previous weekly high marked. Now I saw we've made a run on the previous weekly high. So now my attention is there. So now I'm thinking, I'm waiting for that market structure shift. And of course, we broke this low, and that is where I consider a 5 minute market structure shift, just to make it a bit clearer. As you can see, I did try to get entry of this for us, but unfortunately price only came to 0.5. It had a very similar move. Let's come down to our lower time frames. So yeah, the trade market structure shift happened here. This black line here is the previous weekly low. So once we ran below this, I'm hunting for the market structure shift. And of course, price only came to 0.5 or just a little bit lower on Euro USD. And for GBP USD, I'm not going to show you guys now, but it came, to the 0.5 as well, similar to the DXY. So what am I getting at here, right? Today's trade, now let's just take it simply. Today's trade had a lot of context behind it. I've explained all the context. DXY ran the previous weekly high. This is happening on a Tuesday. It's happening during the London Judas swing. We then have a market structure shift with displacement. So now that I've, seen this, I've seen the market structure shift, what did I do? I put my fibs on it and I waited. What was my target? my target was, this imbalance here on the DXY. I wanted to see this fill, and over on the Euro USD, I wanted us to trade down to, potentially this order block. So I had this order block marked out. It's not a very clean example, I'll be honest, and the price action wasn't very attractive. So this is why I didn't give any signals. As you guys can see, it's very like wicky and not clean. I don't like that. When we have these market structure shifts, I want to see very clear moves and strong moves away. And of course, this, don't get it twisted, this is a very, very strong move away, right? And now just to show you guys, for transparency, of course, this is what the trade would have been. Of course, it was not given out and it didn't reach anyways. And the target would have been these highs over here, right? Unfortunately, price did not want to come to our entry, and that wasn't nice. But what I want you guys to take away here, right? This isn't hard. This is very repetitive. Tomorrow I may hunt the same stuff. How do I know if I can hunt the same stuff tomorrow? First things first. Right, let's get rid of all of this. This is yesterday's daily candle. What can we mark? We can mark this previous daily high, right? But even beyond this, what can I mark? We don't have to just mark this previous daily high. We can mark this whole imbalance here. Because what was my other point? We have all these highs and lows. What was my last point? High time frame arrays. What is this? This is a high time frame array. This is a daily fair value gap, daily imbalance. When price trades into this, I'm going to wait for a 15-minute market structure shift before I expect a reversal, right? I'll explain to you guys, wrong thing, what the ADR is, right? Average daily range. So now, what is the obvious draw on liquidity, right? Of course, I've mentioned this imbalance. So I think price will draw to this. Will be taken out, the previous daily high. And of course, here, price may be bullish or bearish, right? Like, let's just say you don't know your bias for tomorrow. Price will trade into this, right? And it may, so price will trade into this, and it can only move a certain amount of pips, right? Because we know our ADR. Yes. So when price trades into this, what can we do? We can wait for a market structure shift, and even if this daily candle, is bullish up till here, we can trade that protraction. And I'm not recommending we do this, because if you guys remember my last video on contraction expansion, we want to be in line with the expansion, the large move. But of course, I know, it's not always easy to see the expansion before it happens. Sometimes it's easier to see, okay, now the expansion's happened, where might we put high of the day? Did we already put in the high of the day? Of course, the opposite end of the range of the, daily range. And what I'm saying there is, right, you can catch a small market structure shift, potentially on a lower time frame. Once you've completed the ADR, and, in this example, let's say tomorrow is bullish, which I am, by the way, I am bullish. I want to see price trade into this. And of course, DXY had this strong market structure shift downwards. So I want to see DXY now go ahead and start trading lower and head to our, if I just get rid of these lines so it's clearer. I guess for you guys, this is a little bit of a midweek commentary. If you do watch this, tomorrow or tonight when I drop it. And of course, my target is this. We took out previous weekly high. So now if I just go ahead, just see if it lines up right. Should be something interesting here as possible. This is the previous weekly low, which is my target. It's quite convenient that, we might be able to go ahead and run both. But when there's weeks with news, this isn't unseen or unheard of. I do see it happen. This week there is news. There's news tomorrow and Thursday and Friday. So I'm expecting price to start trading lower. It's possible that we don't run it, but I'm very confident that this is the direction that price is headed in now. and we're going to start aiming for these. And if we don't run it this week, it's possible that we might run it early next week. Another thing I want to mark out, just bring to your attention, are these candles. These candles are an order block. Both candles we consider as one. Let's move that higher. So it wouldn't surprise me if we run these lows and we tap into this order block. We anticipate a market structure shift, and of course, if we zoom out, this is my weekly fib. And of course, I told you guys I have this imbalance marked, but it's not a given that this imbalance will get filled. It's possible that we run these lows, we tap into this order block, we've now come to a deeper discount, and then we, begin heading up once again. So now, back to this slide, right? What have I explained to you guys? Just a quick recap. We want to see, first we want to gather our context. See what price is doing, build that framework, that narrative, build that story for price. Now we have that story. We know, okay, today is Monday, Tuesday, blah, blah, blah. I'm expecting a bullish, bearish week, blah, blah, blah. As you guys can go back to my weekly outlook. I told you I want a bearish week for the DXY. I even gave you my targets. I gave you my order block, which I showed you earlier in the video, got run above. But of course, I then corrected myself and told you guys I'm expecting the next target to be the previous weekly high, which happened. And then all these things on the DXY, if you remember, back to basics, the DXY is in charge. You can line these things up with, Euro USD, GBP USD. One thing I want you guys to understand, it is possible where DXY runs the previous weekly high and Euro USD may just slightly miss the previous weekly low or make a shallow run. I've seen that happen, or GBP USD, right? But we just want to pay attention to DXY. When the DXY gives us that reversal, gives us that green light, you'll see something, if not the same, something similar on Euro USD or GBP USD. And then, as I've taught you guys, using Euro GBP, you can decide which one is better to trade and then follow that. So at the start of every week, I will mark out, that previous weekly high, previous weekly low, and of course the previous daily high, previous daily low. And the previous daily high and daily low will change every day. Please don't make the mistake of leaving the previous daily high of 3 days ago. That's not relevant anymore to our current trade. We're looking at the previous daily, so the previous day. So you want to change those markings every day as it goes along. And at those levels is where we hunt these market structure shifts. That's where they're relevant. That's our changes in trend, even if it's just intraday. So on a daily example, we may try to visualize these things, because when I was learning, it really helped to visualize. And if you're not good at visualizing, start drawing these things down. Don't just make notes, draw them down, even if it's just purely with arrows. So then when you see it during the day, it kind of lines up in your brain. It's just easier to recognize. Imagine there's a daily candle, the next daily candle starts, this daily candle then runs below the last candle's low. We have a 5-minute market structure shift, and it happens during the London Judas, right? Can you say, or can you be confident that the low of the day has been made? We ran on the previous daily low, it happens during the London Judas swing, and now we've had a 5-minute market structure shift. If you start adding other confluences like the displacement, price comes to the OTE, taps it perfectly into an imbalance, whatever. When you add these other confluences, you can become very, very confident in what's happening in price. Just try to spot everything, and it gets easier. The last point I've written here, right, is a trade a day. When price is close to these previous weekly highs, previous weekly lows, is very easy. I won't say very easy, but it makes it easier to catch trades, because you have very obvious levels you want to pay attention to. We mark these levels, we wait for price to run above or below them, and then we just sit on our hands. We don't do anything until we've now run the level and then had a market structure shift. This is the importance of the market structure shift. It's the basis of every single model that I currently trade. Not every model ever, but that I'm currently trading, and I will be teaching you guys. But that's about it for this video. One last thing, I just if you guys have any feedback, any reviews. If you think the education is going too fast, I'm including too much in videos, not enough in video, literally anything, please give me feedback. I make these videos for you guys, so I want to tailor them to you and make the education as good as possible. So any feedback at all, just let me know, drop it in the chat, PM me, whatever. And of course, as usual, any questions, you can hit me up or any of the admins, and I'll see you guys in the next video.